Good afternoon, I'm Marla Ellerman, and I am publisher of Mobile Marketing and Technology Online. We're here today at the Mobile Payment Conference, and I'm here with Brett King and Jason Henrichs, and they are both with Breaking Banks. Thank you, gentlemen, for joining me.
No problem.
Let's just start with you. We talked a little bit last night, Brett, about China and mobile payments. China. So tell us about that.
Obviously, mobile payments are huge in China. About 5.5 trillion in payments this year expected in China. Now, to put that in context, the US is last year did about 100 billion. This year expects to do about 300 billion.
Wow.
We're not even within shouting distance of where China is. But the more significant stat is that when you look at mobile payments in China, 92% of mobile payments are done across two technology platforms, which is Tencent WeChat and Financial's Alipay.
Right.
And neither of those are bank-owned networks. So that's a massive shift away from Union Pay and MasterCard and Visa and the other networks that are used, bank-to-bank networks that are used in China traditionally for payments.
Right.
I think it's almost too late for those companies to stay in the game in mobile in China.
Well, I know that Alipay is really aggressively coming into the U.S., and
Sure.
so we'll see how that works. And
They've tried to acquire MoneyGram,
Yeah.
$1 billion transaction. It's not complete right now, but it looks pretty good for them.
That's great. How about you?
Well, let's not lose sight of, we actually have a non-bank that is now actually probably the largest provider of digital wallets, although they don't call that, and it got glossed over because at the same time they announced they were acquiring Whole Foods. And of course, we're talking about Amazon, when they made a very subtle shift to how Prime worked, which allowed you and incented you to store money in your Prime account, right?
Okay.
Overnight, they turned into a digital wallet that is connected to tens of thousands of merchants on the back end. And if I were MasterCard or Visa, I would just be stunned and scared to death because of what they can provide. So JP Morgan Chase has 60 million total customers. Amazon has 66 million Prime members, now all able to store and hold money in a mobile account that they use their phone to shop for, whether they're going to warehouse or showcase, right? I'm going in Best Buy, I just want to see the TVs, but then I get on Amazon, check the prices, boom, and I can pay. And now they're also a payments network.
So that's interesting. So what do they do with that money? Do they make interest off of it? I mean, if I have money in my Prime account, where is that money?
I think Amazon, not being a bank, they don't have to worry about capital adequacy in the same way that a bank does. So they have a lot more they can do with it. And of course, they're a very well-funded company, so they could use it. But they're not the only one. I mean, Starbucks has
Right.
9 billion in deposits right now. Microsoft Xbox credits, there's like 50 billion of those stored. So you've got a lot of these alternative treatments or value stores right now. But what I think is sort of the interesting trend here, think about this, two of the biggest providers of platform services globally, Amazon and Alibaba, are effectively becoming gateways for financial services access. Now, this shouldn't surprise us, but what's happening is you're shifting away from the bank as an island, where you go to the bank to do savings or payments or deposits, to now where banking is sort of infused in the world around us through technology. And on that basis, it makes sense that platforms like Alibaba and Amazon will have an advantage because they're right in the middle of it day to day in terms of your day-to-day commerce and so forth. Whereas banks, they can only be there when you choose them to be there.
Right.
And so this is where banks aren't platforms for commerce, they aren't platforms for transport, they aren't platforms for value chains. All they are is mechanisms for storing value and transmitting that value through their existing payment.
And delivering a product. Do you?
Go ahead.
No, I was just going to say, do you think the government's going to come in and try to regulate them like a monopoly? I mean, wouldn't that be the next step?
It would be a mistake.
It would be? Okay.
Listen, consumers are benefiting out of this. This is one of the challenges of if you stymie innovation, be in the era of it, we want to be protectionist. That's all well and good, but you maintain the status quo. No one is
Right.
getting better, and hopefully no one is getting worse, but it's static. We're not being more efficient. We're not helping people live better lives. We're not sharing cost savings. We're leaving a huge swath of, when we talk about the underbanked, we often think about poor people. I would argue
Right.
90% of Americans are actually underbanked or underserved by
Right.
those banks that they work with. This is the promise of financial technology, and not just fintech as a guise for startup, but for the application of technologies that creates access.
Yeah, that's great. So where do you guys see the market? I mean, you guys are really, you're doing the weekly radio show. We'll just ask both of you guys and then we can wrap this up, but where do you see us in 5 years?
Well, okay.
Or a year.
No,
Wanna do a
no,
year?
no, 5 years is good. 5 years is good. We can talk 10, 15, 20 years if you want as well. But the overarching trend here is that essentially utility through technology is sort of exploding what we used to think of payments and banking. So what's being surfaced through technologies like Amazon Alexa, or your phone that you can tap to pay, or in the future smart glasses that we might wear,
Right.
is that essentially we're integrating the core utility of a bank. And the core utility of a bank really is three things when it comes to a consumer. It's the ability to store value, the ability to move money, and the ability to access credit when you need it, right? And so banks have wrapped a whole lot of products around that, personal loans, credit cards, overdrafts for credit,
Right.
For payments, debit cards, Visa, MasterCard, and so forth, value stores, term deposits, CDs, investment products. But the reality is that those product structures they created were very much built in a sort of 19th century world, built for distribution through these buildings we used to call branches. Today, platforms like Uber and Amazon and Alibaba and Airbnb and so forth are becoming the new ways of delivering value, in specific industries. So unless you're integrated into that, then you don't have value. And this is where that utility is important, but not the products and the old distribution networks.
Got it. Jason, how about you?
Over the next 5 years, building on where Brett was going, I think banking fundamentally has to change because we need the services that Brett outlined, but it doesn't mean I need a branch. It doesn't mean I actually need a
Right.
bank. I just need these things. And so the entrance of the Amazons and the Walmarts of the world, they don't think of themselves as becoming a bank or even financial service provider. They're trying to conduct commerce. And right now, the banks are inserting friction into that. The payment networks are friction. Well, guess what? A market is really good at taking friction out of the system so they can conduct business more efficiently and expand what they're doing. So it's up to banks. They're actually at that Kodak moment that HBS case studies like to talk about of where are we going to participate? Because it isn't about having tellers behind counters
Right.
anymore, or people saying, no one says I need a mortgage. They say I need a house.
Right.
And I need to finance that house. Well,
Right.
how am I going to do that? So someone who builds or sells houses has every incentive in the world to say, how do I integrate that into the experience, that it is actually all one big thing where you're getting what you need, and it's ancillary, necessary, but ancillary, that you get a mortgage in that process, and it has the utility that Brett was mentioning.
Yeah.
And it doesn't matter whether you're in China, the United States, or in sub-Saharan Africa. There's a few trends that we see that are common. It's all moving towards real-time engagement, solve the problem, have a bank integrated in your life when and where you need it right now, and removing friction, right? And we resist friction with regulation and internal compliance processes and legacy systems and all of that. And that's part of the reason that the biggest platforms that are scaling in terms of financial service provisions now are technology-based platforms in developing economies rather than the big banks that we've seen in the West.
That's great. And so our next session is going to be, you're going to be doing your live
We're going to
radio.
do a live radio broadcast right from the stage here, yeah.
And you're going to be talking about real-time payments, which is another hot topic.
Absolutely.
That's great. Well, is there anything else that you guys would like to add?
check out Breaking Banks, the radio show, and also Jason's podcast, FinTech 5.
Yep, FinTech 5. In 5 minutes or less, we talk to some of the movers and shakers, and what we're doing is actually breaking through the mythology.
Okay.
There's so much hype around FinTech, and this is really about talking to the people who actually do stuff and have made change, and how we actually dispel those myths.
And we can catch this every day? Is it every day?
It's every week. Every week as part of the Breaking Banks.
Okay, so then, and it's every Wednesday, the Breaking Bank?
Every Thursday,
Every Thursday?
at noon PST, 3 p.m. Eastern.
There we go. You've got it here. Breaking Banks live at MPC. Thanks for watching.